I'm Matt Bishard with REIT.com in San Diego for REIT World 2012. Joining me for this episode of CEO Spotlight is Gordon DuGan, the CEO of Gramercy Capital Corporation. Gordon, this past summer, Gramercy underwent a strategic review of its business operations, and part of that included your joining the company. The company also shifted its core focus. Can you elaborate a little on the changes that have taken place?
Sure. Gramercy is a company that's been around for a while. It grew quite large, and it was focused on two segments of business. One, a lending business, commercial real estate lending business, as well as a net lease business. The issue is they did both with high leverage. And high leverage going into the downturn was, as you know, a recipe for disaster. So that didn't work out well. But what they found was there were aspects of the net lease business they liked. We met with the board, put together a business plan that said, we can take the capital that Gramercy has shepherded, and it's a fairly substantial pile of capital, and invest it in the net lease business and make it a pure play net lease REIT. And we don't think, at least in Gramercy's case, the commercial real estate lending business works well in a public company, but the net lease companies that have been able to provide steady growing dividends have done very well as public companies. And so that's the strategy, and that's what we're focused on.
And when you took over at Gramercy, you said that the company was well positioned to take advantage of emerging opportunities in the market. How have those played out?
Well, it's playing out very well, and I'll talk about a couple of the opportunities we're working on. We had the benefit, the new people coming in, including myself, we had the benefit of a team that had gone through a workout period. They entered the downturn over-leveraged. They worked it out, and what Gramercy's really left with today is a asset management business. We manage $1.8 billion of real estate for others. We have this lending business, which we've announced we're in the process of selling, so that process is ongoing. And then we have a pile of liquidity in excess of $200 million to invest in net lease assets. We announced our first deal within 40 days of joining Gramercy. It happened to be the largest, most complicated deal I've ever worked on, which is maybe a good way to start. I think it'll prove to be a very good way to start. It's a 5.5 million square foot office portfolio leased to the Bank of America. Primarily leased to them. They've contracted out of some of the space. And the portfolio we're going to buy, we have a contract to sell Chicago, contract to sell Charlotte. Combined, that's 1.5 million square feet. So we're going to buy the remaining 4 million square foot portfolio. It'll be about an 8.9% cap rate, just under 11-year lease with Bank of America credit, 8.9% cap rate. We think it's, in the net lease world, maybe, as good a deal as anyone will do all year, if not better. So we couldn't be more excited with the start that we've had deploying the capital into attractive, high-yielding net lease opportunities.
And you mentioned the team. You brought two executives with you that you worked with when you were at W.P. Carey. How beneficial is that to have people you're familiar with, that you have a history with, especially in light of this situation where you had a lot of work to do?
It's really a good point, Matt. What we've found, I've worked with Ben for many years. Ben Harris, who's our president, came from W.P. Carey. Nick Pell was also at W.P. Carey. And W.P. Carey does so many things well, and we were part of that culture, and as a culture, we thought a lot alike. We know each other's instincts in terms of investing. We've fought over things before, so we've kind of had all those battles and those learning experiences together. So it's been incredibly important, because what it means is I've had more chance to focus on some of our strategic initiatives, like selling our commercial real estate lending business. And while I'm very involved on the investment side, I have guys that are, I trust. They're both smarter and harder working than I am, which is nice to have. And so it's really a team effort. And the people at Gramercy that we've joined, these are also really smart, hardworking people. Of all the things I've been most pleased with, it's the quality of the people. Gramercy employed really top-notch people at every level. So it's been a much better transition. I thought it was going to be much harder than it has been, and it's had its moments, but it's been a very pleasant surprise, especially on the personnel side.
Well, you've certainly accomplished quite a bit already, and we look forward to talking to you again, hopefully at REIT Week, to see how far you've come.
Thanks, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.